All right. Thanks for joining me today. I'm Danny Barker with eXp Realty here in San Diego, California. So today I'm going to talk about just like surface level stuff and then kind of get deep into the HOAs and condominiums. So the reason I'm bringing this up is because I just took a listing in Pacific Beach in a condominium that uh, it is approved for VA buyers and non-QM buyers, but it's not approved for writing loans for Fannie Mae, Freddie Mac, which is conventional, and then FHA. Now, what does this mean? This means that the prices of those condominiums are going to be stifled or dropping, and we've already seen some drop because previously these same units have sold for 700,000 and now they're available in the low to mid sixes. So why is that? Why is that? The reason that is the case is because less buyers can show up, right? So if you think about it like this, if you're a veteran and you show up to an open house and you say, "Hey, I really like this house. I want it." Put in an offer, right? Now, let's say that behind you is five, six, seven other buyers, but none of them are veterans. They would have to go get a non-QM loan. The non-QM loans start out with minimum down payments of 20%. The non-QM loans interest rates are not just 1% higher than the VA loans, they're 2% higher than the VA loans. So if you're going to get a 6% or a 6.25% on your interest rate, the non-QM is going to put 20% down and still have to do 8 or 8.25 on the interest rate. That is absolutely absurd. So the the problem is that there's not enough buyers to prop up the price that was established by the entire market. So if you picture that there's a community, that there's some kind of a title restriction or a deed restriction saying these properties can only be bought with a VA loan, right? That community is going to stay affordable. People are still going to make money because the value is there. And the thing is that only the VA buyers can buy in there, right? So now we have all of these condominiums that are literally like that. They weren't built to be like that, but right now they're like that, that we can go in there and we can be the only crowd that is buying these properties, right? And let's talk about why. Why is that the case? And what is the consequence to buying one of these? First of all, if there's an HOA or a condominium and they've been removed off the FHA list, off of the Fannie Mae Freddie Mac list, it's only a matter of time until the VA catches on and says, "Hey, we probably shouldn't have this one on our list either." And now what gets people off of their list? There's several different factors that get people off the list. It could be deferred maintenance. It could be termite or wood destroying organisms. It could be roof leaks, or it could be that they don't have enough reserves in their reserve account. So their budget is off and they don't have the money to fix things that are unplanned maintenance items. Right now, in the complex that I'm selling, there's a $9,000 special assessment that the seller of my unit is owed. And him and I talked about it, and he will be paying that at the close of escrow from his proceeds, as to keep the out of pocket expenses for his buyer down, so that to not push any other buyers away. Already we're in a limited buyer pool. So listen to what I'm kind of setting the stage for here. I need you guys to understand that there's an opportunity for us veterans to buy properties inside of problematic condominium HOAs. There's a huge one in Ramona that these properties in Ramona should be selling for 550, 600,000 based on their size and the comparables in the area. But unfortunately, they're stuck in the fours because only VA buyers can participate. So no competition, right? So is that where this Pacific Beach condominium complex is headed? I don't know. But what I am going to do is not this weekend, so not like tomorrow or the next day, but the following weekend. Let me see on my calendar real quick. We're going to do April the 5th. So Sunday, April the 5th. Sunday, April the 5th. I don't know a time yet, but reach out to me and I'll let you know what time we've established, or I'll put you on the list of, hey, this guy wants to know what time we're going to go. But April the 5th, Pacific Beach here in San Diego, California. It's in the plaza is the condominium complex. I'm going to show whoever wants to come look at it. I'm going to show you the unit that's for sale. And then we can go tour whatever 2-bedroom and 1-bedroom units are also for sale and see if you guys can conceptualize the opportunity here, right? Now, big warning here. If you buy in a problematic HOA, I want you to make sure that you understand that they're in the midst of getting the work done. They're in the midst of collecting the special assessments with an S at the end, special assessments, right? We don't know how many special assessments they're going to be, because here's the thing. We don't know their books. We could go look at it, but I don't know what the legality is on that. But let's just imagine in one scenario, they have reserves, but they don't want to spend it because there's a reserves requirement. So then they special assess to get that work done. In another scenario, they're special assessing to get the work done, which means they're just asking every owner to pay thousands of dollars out of their pocket on top of the HOA that they've been paying. So the special assessments are here. Let's say the reserves are zero. Well, what happens when they don't need special assessments anymore because all of the work is done and you're caught up, but now you have this reserve requirement to get back on the FHA, VA, and Fannie Mae, Freddie Mac list, right? So we're talking about years of work, years of money, years of assessment, years of correction, right? In these years to come, you are not going to be able to feel good about it. You might grab one for $625 and they might just stifle out at $625. All of them are at $625, maybe $640, maybe $660, who knows? But the bottom is only identified once we start heading back up. So how long is it going to take for these particular condominiums in this particular community to head back up? I would say the amount of time that it's going to take to have the special assessments, collect the money, get the work done, and then make sure that your reserves account is up there. And then you've got to do a head count on how many owner-occupied units there are and how many rentals there are. And I'll tell you right now, I met 2 people that are on the HOA board just yesterday when I went to visit the property, and both of those people own the unit that they're in and another unit that they rent. So already just the people that I met, the seller only owns the one, and he wasn't owner occupied. He was owning it as a rental property. And then you've got the 2 people on the board, they own 2 or more and they live in one, right? So already we're kind of flirting with that. Maybe it's not 50% or better on owner occupancy, right? So we'll have to figure that out at the end of that. However, once we get all of the work done, all of once they get, not me, I'm not doing it. Once they get all of the work done, once they get all of the special assessments, once they get all of the reserve accounts, once they get all of the head count on how many of these properties are owner occupied, finally, they can maybe petition to the FHA, the VA, Fannie Mae, Freddie Mac, get back on those lists. But in the meantime, do not buy this property if you cannot hold it for 5 years minimum, 10 years to see the return. So let's just say this. If you're going to buy a problematic condominium in a problematic condo in a problematic community with a problematic budget or deferred maintenance or whatever, you're buying this unit for 10 plus years. And I need it to be get back on the lists for FHA, Fannie Mae, Freddie Mac, VA, and then 5 more years after that so that you can appreciate or you can materialize the appreciation in that 5 or more years. Do you have to live in it for that time frame? No. If you use your VA loan to purchase it, you've got to start out with it being your primary residence. But if you're going to have to move out because of life and whatever, one of the 5 Ds, right? When one of the 5 Ds happens, you can turn that into a rental property. It will go against the whole community as like that's now not owner occupied anymore. And we need a certain percentage to be owner occupied for these lenders to be, A plus ratings. We're going to have to really dig deep and understand what it is that you're buying. And that's where who you work with really matters. That's why I turned most of my business into building referral networks of real estate agents across the United States that can give people the real guidance. You see, I'm not telling you to go buy one of these units. I'm not telling you don't buy one of these units. I'm telling you, you need to know about these units. You need to know everything about these units in order for you to make a sound decision, right? Is there an opportunity to buy one at a discount today, hold on to it for 10 years, and then catch a huge appreciation? Yeah, for sure. Is it going to be painful? Yes. Yes, it's going to be painful. You don't know how much the special assessments are going to have to be, and you don't know where they're coming from, right? So now let's talk about where they're coming from. Where is this one in particular coming from? It's called SB 326, and that's a state bill here in California. What is it in response to? Well, we had a tower in Miami that had a pool that leaked, that then caused spalling, that then degraded a corner of the foundation of the entire building, and that tower came down in the middle of the night, people in bed crushed to death or having to be rescued, right? How terrifying is that, right? And then you take that terrifying incident and the federal government says, hey, obviously these HOAs and these condominium complexes are not managing their maintenance well, right? And what's really sad about that, to me, the saddest thing about that is this: every single person in ownership of a condominium in that complex or in that tower or in that community is a member of the HOA. There is nobody that's a member of the HOA that doesn't own one of the properties in that HOA. So if there's deferred maintenance and the tower comes down, in my opinion, it's not the HOA's fault as much as it's each and every individual owner's fault, right? You see something wrong in your community and you just turn and walk away and say, well, that's the HOA's issue. You talk about the HOAs like it ain't you. You talk about the HOAs like it's some mystical entity that's here to rip you off, right? HOAs cannot run as a profit. Some HOAs hire companies to collect the payment, manage the money, so on and so forth. In my opinion, it protects you from the individual, like the treasurer, the elected treasurer, or the vice president and the president of the HOA can, really getting together and siphoning and stealing the money out of the HOA. That third party company can protect you from that. But hey, guess what? That same issue happens from the third party companies. The third party company has a bad actor in it and he siphons all the money out of your HOA. How does that money come back? There's only one way it comes back. It's called special assessments. So basically, there's no insurance for embezzlement, for money to be embezzled out of the HOA. There's no insurance for it, right? Should we look into maybe creating some insurance for this? I think so, yeah. I think we should probably have HOAs have to be responsible to a certain entity. Once an HOA proves that they are not responsible enough to manage their own deferred maintenance, that they're not responsible enough to not have an embezzlement situation happen, that they should have to go into a company, an oversight company, that's just a whole nother bill, right? You're already paying $375 a month. You're already paying $800 a month, right? How about hire another company? There's $840 a month. What are you getting from that? What is your complex getting from that? Is there any maintenance happening from that? No. So what's the real answer? The real answer is this is America. We are responsible men and women. We need to stop asking an HOA company to do our flipping job. You bought a condominium. You're an owner of that condominium. You are in the HOA. Stop asking a third party that's going to just cost you and your neighbors that much more money to be responsible. How about check everyone's self, right? Yeah, you got a treasurer, and that treasurer has to be elected every year. And he can only be in the elections 2 years in a row on these bigger condominium complexes, right? So how about some oversight inside? How about some free, not costing everybody another $10, $20, $40, $50, right? But what ends up happening is that the oversight goes away because of this weird concept that we've had for the last 20 to 30 years where HOAs have just been popping up like crazy. In the last 20 years, good luck buying a brand new property that doesn't have an HOA. And you still don't know how to own inside of an HOA. You still don't know that when they send you your yearly update, it has the budget on it. When you don't like what they're spending the money on, that's your money. You should be able to go to them and say, hey, let's not spend the money on this. Let's spend the money on that instead. Let's get this maintenance fixed. Oh, well, that's going to be a special assessment and nobody wants to pay a special assessment. hold on, are you kidding me? Are you telling me that nobody wants to pay $500 each today so that we don't 20 years from now have our older selves or our kids, our inheritors, to have to deal with a $9,000 assessment plus who knows what and who knows when is coming the next ones, right? And meanwhile, while you're paying these special assessments, the lending institutions don't care that you are working on it, right? They're not putting you on the list until that work is done. You already had from 2024 to 2026 in this particular issue to show the government that you were going to meet these criteria so that your buildings don't come falling down, right? Does this one risk building falling down? Not like the one in Miami. There's no pool that's rotting out the foundation of this one, right? But the idea, the concept is y'all let the government in. Now you have to pay the money that the government is requiring, and you got to do it with their vendors, and you got to do it on their timeline. And if you don't do it on their timeline, they're going to rip you off of their list, their government-backed loans. Because what's non-QM? Non-QM is just, it's not insured. There's no PMI because there's nobody to insure it. So because of that, the investors are like, I'm not okay with making the same money giving it to a non-QM as I am to giving it to an FHA or a VA. I know that if I lose money on an FHA or VA, I've got insurance that's going to make me whole. Well, non-QM, I don't have insurance to make me whole, so I better make really good money off the rip, right? So now I've got to charge extra on interest. So now you've just made it to where it's more expensive monthly to own property inside of that HOA. So what's going to happen? Well, people are looking at it like, well, a 2-bedroom rents for $3,500. If I go buy it with a VA loan right now with zero down, I'm looking at $5,700 a month. $5,700 a month to own it with a VA loan, $3,500 to rent it. When does that make sense, right? Does it make sense that you pay the extra $2,000, the $2,300 a month to be an owner, and then on top of that have to come out of pocket $8,000, $9,000, $10,000? I don't know. It's really an individual concept. Do we have to wait until all of the current owners that have to sell? Remember the 5 Ds? I have a video in the back there that's the 5 Ds of why people sell. Now, if you have to sell, why people have to sell it, right? If you have to sell, then you're kind of screwed right now, right? Because the prices are headed down in that complex because all you can do is sell it to a VA guy. The VA guy is going to put zero down. He could rent one from a current owner. Shoot, the owner that I'm selling for right now would probably rent it out for $4,000 a month instead of sell it, right? So to own it, you got to pay $5,700, $5,800 a month. That's kind of crazy. That's kind of a lot, right? But does it make sense for like 2 single E5s? The one I'm selling is 2 beds, 2 baths. Each person has their own private bathroom, right? And it's a nice living space right outside the pool. Super walking distance to the shops, walking distance to a couple of bars, and you can walk to the beach in like 25 minutes, but ride your bike in 10, right? The idea is that this is a wonderful location. It's a wonderful opportunity that in any other world, had they been just keeping up with the maintenance for the last 20, 30 years instead of deferring it, if they would have just been keeping up with it, who knows how much these things would be worth. But today you can grab one for $660, which in that area, if you're looking at a detached home in Pacific Beach, good luck under $1 million, right? But if you're a single E5 with another single E5, you're getting $3,000 or more per month on BAH. This payment falls below what the both of you would be getting on BAH, but you got to own it for 10 years or more for it to make sense for you to get a return on this investment. So does it make sense? You're here for 3, 4, 5 years, and then you get transferred away. Well, there is always that Navy policy that just came out. We don't know what the fallout's going to be on it, but they're going to kind of let us homestead, right? Like for me, I did my training in South Carolina. I went to a ship that was in Norfolk, and shortly thereafter moved to San Diego, and the ship did. So I had to also, right? And then got orders to recruit in Florida. So I moved from San Diego to Florida, had 2 kids, and then they didn't care. They were like, here's some orders to Norfolk. Boom, moved me, wife, 2 kids to Norfolk. Get done with that tour, they're like, hey, we want you to go be a RadCon tech over in Guam. And I'm like, let's see how that goes. And my wife's super excited. My kids and wife loved living there. But why did we have to pack up the house with a kindergartner and a third grader and move ourselves all the way over to the island of Guam, right? The idea the Navy's coming up with is like, why not just have them right there? San Diego's got all of your ships and your shore duties. Norfolk's got your ships and your shore duties. Like, I guess in the nuke world, we would have to concede and say, well, we still need people to go down to Charleston to do that. But I mean, maybe we need to split up these aircraft carriers on the East Coast anyway. They're looking at Jacksonville anyway. I'm getting all kinds of away from talking about condominiums. My point in the video today is condominiums that are problematic will be a problem for years and years and years to come. However, when the day comes that the problems are all fixed and all of the buyers can participate, you better bet that the prices are going to scream up. So what am I saying? I'm saying that there's $1 million houses all around this plaza, and the plaza itself is selling in the 6s right now when it should be selling in the 7s. Now, when we go into getting all of this work done, the rest of the community isn't in an HOA problem. The rest of the community, FHA, conventional, and VA can buy all of those houses all around it. So they're going to keep competing and driving prices up around this complex. Meanwhile, VA veterans are going to have a heyday inside of that community. They're going to set the market. We get to set the market. We get to determine how much is this worth, right? So we're going to drive the prices down, and we're going to take ownership of the properties. Meanwhile, the FHA and the conventional buyers can't participate, and we're going to end up raking it in. Let's turn this complex, from everybody that sells in that complex, let's turn them all into veteran-owned primary residence houses, primary residence units, right? I've got this complex in PV. I've got a complex out in Ramona that I know is like this, and I've got a complex here in Escondido that I know is like this. I'm going to start looking into all the complexes in California, because I'm telling you, this SB 326 is going to hurt condominium ownership 100% of the time if they cannot meet the criteria of the SB 326. And then what's that going to do for the people that can only shop inside of the condominium budget, right? Well, the VA guys can go buy whatever they want, but an FHA guy that didn't serve the country, he's going to have to go and he's going to have to shop inside of just the complexes that are just FHA, that are also FHA, right? So now they're competing with VA and FHA, probably Fannie Mae and Freddie Mac. So now the FHA and Fannie Mae, Freddie Mac buyers, they're all competing against each other over there, and us, because we can go in and grab one too. If you like that complex, go grab one, right? But on the other hand, these complexes that are only VA and the rest of them are not, and the rest of them won't write, they're gonna drop in value. They're gonna stay still or drop in value. So as the rest of the neighborhood appreciates, it's just going to be pent up value. So let's say that these stay in the 6s and the $1 million houses become 1.1, 1.2, 1.3. Well, once we can get FHA and conventional buyers in here, the FHA and conventional buyers that cannot afford a house in that neighborhood at 1.3, 1.4, they're going to look at these condos and they're going to be like, oh, that's only 600,000, right? And then there's going to be 5, 6 of them that show up, boom, 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 7, 750, 8, 850. And then it's going to make sense that, okay, well, 850 compared to 1.4, right? Now, it's crazy to think about like speculation and to really rest on it. And I'm not making any guarantees here. The only thing that I can guarantee you on this one right now is that only VA and non-QM can buy it. All the rest of the stuff that I just talked about, it was all speculation. And you either agree with me or you don't. And I'm not here to make you change your mind. I'm just here to help you think about things that you wouldn't normally think about on your own, scrolling through, doom scrolling, whatever the case is. I hope I caught you on a good one. I hope you listened. I hope you wanted to have a further discussion with me. If you have anything in particular that you want to talk to me about, hit me up. You can always grab a spot on my calendar. We'll do a 1-hour Zoom call. We can talk about where you were, where you are, and where you want to go, what the next step in order to get to where you want to go would be, and get you in touch with the realtor and the lender in your market that will treat you to the best of their abilities. You'll get the best product at the best price with the best service at the same price. Let's go.